Welcome to the channel. My name is Nick and I'm a top author on TradingView with over 260k reputation points, and every day I share a lot of free education and analysis for all of you. So make sure that you subscribe to the channel so you don't miss out on all this free content, and I will see you on the charts. In today's video, I will be speaking about GBPUSD, one of the most traded pairs in the market. And as usual, I will be first covering the technical aspect of this market. Then we will go and see what we have from an order flow perspective by checking the commitment of traders. So the COT data, which is what the non-commercials and the biggest speculators in the market are doing. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for a potential move here on the pair. Now, starting from the monthly time frame, what we can see is that at the moment we have a market which is currently testing a quite strong area of previous monthly resistance here, again resistance here, and again resistance here, which now that the market has broken it to the upside is turned support here. And as we're testing it, obviously the market is reacting and starting a rejection to the upside. However, it's also important to point out that the close from a monthly perspective here, this previous close is a little bit lower. So there is still the possibility to see a little bit more short-term continuation to the downside to really test the supply and demand, the demand and support that we have at this area in order to see the market then create a rejection to the upside. So obviously here on the monthly, there is still the possibility for a little bit more short-term continuation to the downside before then seeing a rejection to the upside. We go down on the weekly time frame, and on the weekly, we can see how the market has just broken all structure to the downside. In fact, we can see how this area was previously acting as very strong support and demand here, against support and demand, against support and demand. And currently we have just seen a weekly close below this support, which obviously now makes this previous support turned resistance. So there is a good probability to see the market go and retest this resistance and then get rejected to the downside. Just a quick thing, make sure that you like, subscribe, and let me know in the comments below any suggestions for new videos. We drop down on the daily time frame, and what do we see now? Here on the daily, we can see how the market has just created this overextended M pattern. Now, when the market was around this area, I made a full breakdown explaining all the reasons for which from here we expected the market to start this rejection to the upside to retrace at least to the 0.32 of the Fibonacci taken on the daily impulse. And in fact, the market has just reached our target. And by the way, I will link in the description this previous analysis so you can go and check it out for more free education. Now, if we go and see what we have from a COT perspective, so commitment of traders, which is what hedge funds and the non-commercials in the market are doing, we can see a lot of buying lately. In fact, we can see how we went from having minus 24k net positions all the way up to having 1.9k net positions with 6k longs added with the last report. However, we still see some shorts added as well, which means that we could easily see another rejection to the downside, the market provide a lower low, hunt all the stop losses below this low of the people that started longing, also generating new liquidity for breakout traders that will start shorting, and then here hedge funds can basically continue the accumulation of longs as they have been doing for the past 3 reports, adding thousands of long positions. So there's a good probability that we will see a new rejection to the downside, the creation of a lower low, more accumulation of longs, and then the rejection to the upside of the monthly support and demand that we have previously identified. So basically, there is a potential short-term shorting opportunity here for the completion of this impulse correction and impulse pattern to the downside. So how we will be approaching this potential short-term shorting opportunity with students. Now, the way in which we will be doing that is as usual being reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best timeframes from a directional perspective. However, when it comes to confirmations and entries, the best timeframes are the 4-hour and the other intraday timeframes. So with students, what we will be doing is monitoring price action from an intraday perspective during this move to the upside, waiting for the market to shift from an intraday bullish market as we have right now to an intraday bearish market. And only if the market will shift from an intraday bullish to an intraday bearish market, only at that point we will be adding GBPUSD to our watch list, and as soon as the market will provide to us one of our valid entries, we will be taking a nice short with a good risk to reward and good probabilities at that point for the move to the downside, and for the market to complete this impulse correction and impulse pattern to the downside, and for the market to potentially create and provide a lower low. If you enjoyed the video, make sure that you smash that like button and comment below. It really does support the creation of more free analysis education and updates for all of you. You can also go and check out the mentorship program. The link is in the description. It's a very complete program. First, you learn all the rules of my rule-based strategies. Then every single day you get a new daily market breakdown showing you how to apply the strategies in live market. And you also get your questions answered every day in the daily Q&A session. So it's a very complete program. I really suggest that you go and check it out. The link is in the description, and I will see you in it.